Thanks for tuning into Stocks with Antonio. What a week so far in the stock market. A lot of earnings. Today, Wednesday, was a big day. We had even more earnings. Part of the Mag 7 came out when the market closed. The Jerome Powell spoke. A lot going on. And SoFi sold off, as you can see. And we're going to get into SoFi. But before we get into SoFi, let's go over a little bit of the part of the Mag 7 that came out today. April 29th. The key reports today were Microsoft, Amazon, Alphabet, which is Google, and Meta. All four beat revenue and EPS expectations overall, but the market's reaction was mixed. So the winner is Google. It's the clear winner. Strong results, especially in the Google Cloud growth, and the stock jumped after earnings. So you can see that right now it's up. Amazon did good, but unfortunately not enough. And you can see a little bit of a sell-off, but not too much. I think it will rebound, but that's what we're seeing right now. Microsoft, solid, strong cloud growth, but the stock is down after hours. And then Meta took the biggest hit after hours. It fell about 5 to 7% after hours. So it definitely took a big beating, concerned around the spending of AI, right? That's been a big concern for Meta, and it continues to be a concern. So you can see the sell off. Now, in my opinion, these companies that I just mentioned are all great companies, are great companies to have in your portfolio. And if you see good big pullbacks into them, I see them as great opportunities to DCA. Now, every single company I just went over right now, I have in my portfolio. And if they do pull back, I'm going to continue to DCA. One that I've been DCAing in has been Amazon before it did the run up to 260. I bought it in 2022 at 144, and then I was buying as all the way up to 200, and I bought some all the way up to 220. After 220, I haven't bought any more. But if it comes back down close to 220, I will continue to DCA because that's my long-term investment. I don't plan to sell any of these stocks for the next 10 years. And I believe 10 years from today, these stocks are going to be a lot higher than where they're currently at, or they're going to run up, split, my share count's going to grow, and they'll run up again. And that means if in 10 years from now, I see Amazon around $200, it probably did a split once or twice, and I have a lot more shares, and my portfolio is going to continue to grow. And that's what it's all about, right? We want to build wealth, and it takes time. That's why, like I said, DCA on the pullbacks where there's opportunity, and just focus on investing into your account. And I believe that will help you build wealth as long as you're investing in good assets. Now, remember, I'm not a financial advisor, right? I'm just sharing my opinion and what I'm doing with my portfolio and what's been working for me. Now, SoFi, we saw it take it was trading when the market opened at over 16, and then it pulled back to under 15. Right now, it's under 15. And some people might say, man, SoFi, you got into in 2025. You saw it do the run up and went all the way up to $32 around there. And then we've seen it come down. It's taken and beaten, and it's under 20. So it's a stock under $20, right? And I think this is a great stock under $20. I think it's attainable for a lot of people. And this is a stock that you can buy depending, of course, your financial situation, maybe on a weekly basis, on a monthly basis. But hopefully, if you've decided that you wanted to get into SoFi, I recommend do your research, right? You should hopefully be able to at least get a share a month, right? And grow your position size over time. But I believe this stock in the long term, right? I'm not saying this is going to happen in a week. Sorry about that. Not going to happen in overnight. But if you're investing for the long term, I think this one is going to be a winner. Now, I could be wrong. I got to throw that out there. And investing does carry risk. So just please understand that. But let's go a little bit over why SoFi selling off, because that's important. So earnings came out for SoFi on April 29th as well, and it dropped sharply despite strong earnings. The sell-off wasn't about the past quarter. It was about guidance, expectation, and forward signals. Remember what I've been saying if you've been following the channel? about earnings and what investors are looking for. If you haven't seen those videos, go check out some of my past videos. Don't forget to smash the like button and subscribe to the channel so you can stay tuned. But when earnings come out, a lot of people get confused when a company beats, right? Why do they sell off? And remember, earnings is a big part of that, because when you're investing into a company, just think about it. You're investing in the future, right? You want to see that they did well in their last quarter, but you also want to see, hey, does this company continue to plan to grow and become more successful, or did they have a good quarter but the future doesn't look bright, right? Because you don't want to take your money and put it into a company that's not going to continue to increase in the share price. If it's not going to continue to increase in the share price, you're better off not investing in that company. You're better off not investing into something else, or keeping your money in the bank. Because a lot of people say you gotta invest because your money will get eaten up by inflation. But if you're making the wrong investments and you're investing in the wrong companies, guess what eats up your money quicker than inflation? Bad investments. Bad investments. And I think a lot of people don't say that enough. A lot of people just tell you to invest, but they don't say, hey, a bad investment is going to cost you more than inflation. So inflation shouldn't be such a big concern if you're making bad investments. You want to make sure you're doing your research on these companies. And if you're looking at their earnings, what's the future? What are they predicting? If they don't have a strong forward guidance, it makes sense to be cautious and not want to invest in it. But sometimes you might look at the earnings and say, you know what? I believe investors are overreacting. You have to come to that own, you have to make that decision for yourself. Because in my opinion, I still believe SoFi is an opportunity to invest in. I bought SoFi when shares were around $13 in 2025. And then I bought more shares at 16. I've bought in more shares at 17. And my last purchase was all the way up to $18. And I'm not selling. It's in my long-term portfolio. And as it pulls back, I will buy more shares. Now, I'm just wanting to share that with you. But the biggest thing that caused disappointment in investors is guidance didn't improve. That was the biggest reason. So SoFi kept its full year 2026 guidance unchanged. Well, we're in 2026. We're already going into May. It would have been nice to see them, change that into a positive direction instead of keeping it the same, because some investors are going to see that as the company weakening. And that can cause concern. And then if you're in profit, some people are going to decide to take profit and may move their money around. But you got to remember, everyone that's investing in the company is investing in different reasons. If you're investing long term, I think this one is still a winner. I think this one is still an amazing opportunity under $20 a share. And let me know down in the comments below what's your opinion. Do you agree with me? It's okay to disagree with me. Just let me know your opinion in the comments down below. But investors expected a raise after a strong beat. That's really what they wanted to see. SoFi came in, they had a strong beat, good numbers, but they didn't raise guidance for 2026, and they wanted to see that. And I can understand why. So when a high growth stock beats but doesn't raise guidance, the market treats it as disappointment. So they were disappointed, and the stock's getting punished. But like I said, I'm going to continue to hold SoFi in my long term, and I'm going to keep adding. I think this one is still a great opportunity. I just wanted to go briefly into it. I'm not making such a long video today. It's just a short one because it's getting late. But I hope you enjoyed the video. If you did, smash the like button. Don't forget, check out my description box there. And if you haven't done so, go ahead and hit the subscribe button. I really appreciate your time. Thank you for watching, and I'll see you on the next one.